We had a very strong close of the year where we were able to present strong results over the full year, as we also committed a 7% growth, significant step up in profitability of around 310 basis points, and very strong cash flow of 1.6 billion that came into the company. And that was based upon the execution of the plan that we laid out earlier in the year, where we said we have 3 strong priorities: patient safety and quality, supply chain improvement, and simplification of the work at Philips. That has been driven the improvements both in sales, also 1 billion of productivity savings that contributed to the profit step up, and also as a result of the better operational performance, a much better and strong cash flow. We also announced, as you alluded to already, that indeed we have now agreed to terms that were proposed by the FDA that are now with the FDA for finalization and court approval. That's a very important milestone because it's important to get the clarity, on one hand, for the roadmap to compliance, but also very much to restore the business of SRC. And then if you tie that to our guidance forward, actually we can also now reiterate that the plan that we have presented last year, now including the consent decree, is something we are committed to. And in 2024, we continue to improve our performance. And therefore, the guidance that we have been given, 3 to 5% sales growth, further profit improvement to 11 to 11.5%, and as well another year of strong cash generation with 800 to 1 billion, actually is proving that we continue to further step up the performance in Philips.
Roy, you've gone through a lot of issues there. Let me just ask the question, which I think a lot of our viewers want to know is, when you get your FDA consent agreement, that's great, but how much of a line does that draw under other litigation and other issues relating to the respirator recall as well? So the FDA would be a good tick in the box, and you've gone over that as well. But what else needs to be solved and sorted for this to be an issue of the past?
There are 2 remaining important dossiers we are working through. One is indeed litigation, and the other is a DOJ investigation. What we said earlier is that we are working also through those. Of course, we are dependent also on the DOJ when they come forward with their investigation, their conclusions. We said we do not expect that earlier than 2025, most likely. We said earlier that in 2024, we hope to provide more insights in the litigation. So these are steps that we continue to take to get to the bottom of this. But as I also said, the important thing is that we are focusing on getting the totality of Philips really to its full potential. And therefore, this first step was important and also gives a lot of confidence that we can continue to provide our exciting innovations to a market that really is in desperate need. Because as we all also were discussing, healthcare really is in a very deep crisis. There's just not enough people to take care of the patients. Technology needs to step in. There's a lot of exciting AI opportunity to apply technology in a different way that needs to be then absorbed into the system, also supported. And that's something that we are very much focused on in 2024 in a world that is volatile but needs technology and solutions to actually progress.
Before I ask you about the core business, can I just round out on the numbers that investors should be thinking about when it comes to further provisioning around the legalities and the regulatory issues? You've mentioned a provision of 363 million euros in the fourth quarter today. What further provisioning will be required in coming quarters?
So what we said is we took the 363 provision in the fourth quarter. We also guided that based upon the clarity we now have, we expect a run rate of 100 basis points that will come into the year of 2024. It's also included in the guidance that we have been given for a 3 to 5% growth for the total company and this EBITDA step up. And then, as we mentioned before, litigation, that's a process ongoing. We have not been providing for that because there's no clarity on whether, and if so, then what kind of provision would need to be taken. So that's something that still will be ahead of us. That's also why we remain very focused on getting our operational performance to the best and to its full potential. The cash generation that you saw is very important for that. We were extremely happy that we ended this at this 1.6 billion of cash. That was an important milestone to also be prepared for anything that could come in future. And we will continue that focus with a very disciplined capital policy within Philips, but most importantly, to really get all of our businesses humming. And what you saw, and we were very excited about, was that both the D&T business, the connected care business, and the personal health business, all three have been growing. We have also been growing in all three of the geographies. So in North America, in Europe, as well as in Asia. And whilst there are different dynamics at play, where we see that China is a bit subdued, that Europe is growing but not the strongest, and US actually is the strongest market, we are pulling growth out of every single market of the world.